What's up?
Hey Mitch, how's it going?
Not bad, dude. I like the studio.
Yeah, it's the new Blocker Intelligence Studio in a top secret, location here.
First in-person pod too.
Yeah, first in-person pod for Blocker Intelligence. Pretty sick.
Yeah, it's. I'm excited to be involved in the first in-person one. So.
Absolutely. So we have a few topics. It's gonna be a little bit of a different episode. I know, normally we talk ask people questions like Lynn Alden, Michael Saylor, whoever. This time I think we're just gonna talk about questions or talk about topics and then go from there. Awesome. So first topic that I think we should cover, FTX debacle. What are your thoughts?
Dude, it's been a while, man. I've only been in Bitcoin 2 years, so this is by far the most eventful situation that's gone on. It feels a lot bigger than the Celsius Voyager stuff from earlier in the summer. I guess because FTX is a household name, especially now, but even before then, sponsored the Miami Heat Stadium, their logos on the MLB umpires all season, so it really feels big, and I think it's fine because as we've seen on chain, a lot of more people are self-custodying their Bitcoin, so it's really, you learn that lesson one way or another. So I think it's best to learn that lesson without taking a huge financial hit. So definitely get your Bitcoin off the exchanges because we've seen the biggest one now go bust. So.
Yeah, no, totally agree. I think I got involved with Bitcoin, I guess, in 2017. And this, to me, this past week was one of the, craziest, most interesting weeks in the history of crypto, but also even just Bitcoin as well.
Somehow it feels more exciting than anything from the bull market. I feel like the hype of last bull market was Elon Musk started talking about Bitcoin, and then he started talking about Dogecoin, and that was just a whole fiasco. But this feels like even so much more attention on Bitcoin and Bitcoin adjacent products.
Yeah, well, exactly. We basically found out from FTX that they owed $1.6 billion worth of Bitcoin and they held 1.1 Bitcoin on their balance sheet. So a little bit of a mismatch there. And I think that, it seems like a lot of exchanges or Bitcoin yield products, have been doing that, not just this summer, but potentially since last year.
Do you think regulation's the answer? Because I don't like to shill for regulation. That I don't think that should be our knee-jerk response to something bad happening. But I could see the argument because they're running Ponzi schemes and it's gambling. Casinos are regulated. What's your thoughts on that?
Yeah, it's a good question. I definitely think coming out of this, there's going to be a lot more regulation, right? When people lose a lot of money in just about any market, more government steps in, they try to, save the day. So I think whether we think it's good or bad, it's probably kind of inevitable at this point. But honestly, it's going to be interesting to see what happens with SBF because...
He was in with the regulators more than anyone else.
Yeah, exactly. Yeah, it's a great point because, like you said, he was buddies with Gary Gensler, buddies with a bunch of people inside.
Waters and a bunch of people, second biggest donor to the Biden campaign.
Yeah.
It's strange, man, for sure. But, the thing is, Michael Saylor was on this podcast a year ago, and he was, asking for clarity on regulating between Bitcoin and crypto. It seems like Bitcoiners are avid for regulation because they know Bitcoin's a commodity. You can't really regulate that in the same way. So it's just funny to see that Bitcoiners have been calling this for a while, and regulation's got to probably come soon. So
yeah, it's a great point. I think regulation coming probably is inevitable at this point, like I said. And it doesn't really affect Bitcoin. Pretty much everyone in the world understands that Bitcoin is a commodity. There's no pre-mine. There's no people that are getting coins for free. You have to put in the energy, put in the proof of work to acquire Bitcoin, or you have to convince someone else in the world to exchange their Bitcoin for your product or service. So it's arguably the most fair money that we've ever discovered as humans. And to me, it's certainly a commodity. And the only thing that regulation really threatens, to an extreme degree at least, is a lot of the altcoins that had pre-mines and maybe the insiders ended up getting really wealthy, cashing out at the top or near the top, and then retail comes in and buys their bags and hopes to get rich in the altcoin gambling casino.
Yeah, for sure. Well, we'll just see how things shake out with that, I suppose. the great thing is, Bitcoin didn't miss any blocks. Like Bitcoin's working fine. Hash rate is miraculously hasn't gone down yet. Do you think it's going to? Because what are we at? We're projected for a 1% increase in difficulty.
Yeah, I mean, it's going to be very interesting to see how mining shakes out, over the rest of this year, the rest of this winter, and into next year. We've been talking about it for a while because a lot of people on Twitter have been, asking me and then just talking in general about, okay, Bitcoin's down, mining difficulty is up, energy prices are rising. How's hash rate still coming online? How are miners still, deploying more machines and hash rate is actually going up? And it's a pretty interesting question. Some people were like, hey, maybe nation states are now mining Bitcoin or potentially attacking Bitcoin. I think while that's certainly possible, I think it's highly unlikely. I think a lot of people don't understand that in this industry, it's very easy to deploy $1 billion of capital into Bitcoin itself because it's just a wire transfer and then maybe, a week or 2 weeks of slowly accumulating actual BTC. But when it comes to deploying mining infrastructure, mining hardware, manufacturing those rigs, building the infrastructure, plugging them in, signing the power purchase agreements, that's a lot of work and it can't happen overnight. So all of this hash rate that's coming online now that has come online since the beginning of this year was planned, in late 2020 and 2021. So there's just kind of this lag between the price of Bitcoin and mining difficulty.
So you would say that hash follows price.
Yeah, it's such an interesting debate. I think there's generally speaking, yes, but then also I think at certain points the price of Bitcoin can get so far overextended that specifically 2021 where mining just looks extremely profitable. So a lot of capital that would have flowed into Bitcoin, maybe at 60K, was actually flowing into mining because mining looked like such an attractive investment or attractive, opportunity. And ironically, it may have been one of the worst opportunities to get into mining and to get into Bitcoin. But I think in the future, buying into Bitcoin and buying into mining is something that you want to do when margins are low, price of Bitcoin is low, price of mining rigs is low, all of the above, right now.
Yeah, basically, when it seems like the worst time,
exactly,
is the best time.
Yeah, exactly.
I saw something the other day. Riot started building their Windstone facility when Bitcoin was $3,000.
Yeah, it's crazy. Yeah, exactly. I mean, I remember this is such a funny idea back in 2018, 2019, the bear market when we were around $3,000. The world was ending. Riot was building their Windstones.
People probably thought they were crazy.
Yeah, exactly. They probably did. And Mason Joppa, CEO of Blockware Solutions, was on Riot's advisory board. Pierre Rochard was, a bunch of other prominent Bitcoiners that are just kind of regular Bitcoiners on Twitter. They were part of Riot's advisory board and they really helped build out that company.
Yeah, that's great. When you mentioned, people suspect a nation state was mining Bitcoin, that could be something here to jam on. If I were a nation state, how would I go about acquiring Bitcoin? Because you can't announce a market buy, but like you said, building any kind of serious mining infrastructure is going to be a chore and it's going to be noticeable, right? You're not going to be able to do that in disguise. So it is interesting to think about, how will the first nations get into Bitcoin other than El Salvador, right? Because obviously they can announce it, and because they're such a small nation, doesn't really move the needle like we expected. Not to rag on El Salvador. Obviously, great things are going on down there. I'd love to visit. I hear a lot of good things about how they're really using Bitcoin on a day-to-day sense. But seeing a really powerful in control nation get into Bitcoin, I'm looking forward to seeing that happen, and I'm curious how they're going to do it.
Yeah, I mean it's a very interesting question. And I'm not exactly sure how it's going to play out, but one potential idea is, nation states will be confiscating Bitcoin from criminals, like we've seen with the recent Silk Road hacker.
The FBI is one of the top 10 holders of BTC.
Yeah, exactly. I mean, I think they just confiscated 50,000. I think they confiscated in the past 70,000. I don't think they've sold. They certainly haven't sold the 50,000. I don't know if they sold the 70,000 before that. But yeah, I mean. The U.S. government probably has a lot of Bitcoin, and that's a great way to accumulate Bitcoin.
It's interesting, right? Because I believe that the guy they busted for, he For those who don't know, he basically defrauded the people on the Silk Road, found some kind of just bug in the code, and he was just spamming withdrawal because the guy who created it, Ross, he wasn't a professional coder by any means. So there was a bug, and this guy basically ended up with a bunch of Bitcoin. And from what I understand, the FBI, they basically pressured him into giving up his keys, right? He was following, good protocol, not your keys, not your coins, but he ended up caving. And if he would have not subsided, they wouldn't have been able to confiscate his Bitcoin. But it makes you wonder about the whole lose your keys in a boating accident type of, is that real? Could you actually get away with that? Clearly, this guy with a huge Bitcoin bag, it didn't seem to work out for him.
Yeah. I mean, I think I read in the report that he lasted like 6 months before they confiscated the hardware device, and from 6 months later, him actually finally giving up.
I'll give him props. 6 months, because I know the FBI was probably not holding back, especially after a little while, and when he resisted, they probably really put some pressure on him to give up that Bitcoin. So he lasted 6 months. That's impressive.
Yeah. So for listeners that may be new to Bitcoin, since we're talking about this whole idea of not your keys, not your Bitcoin, what does that mean, and like why do you think that's important?
Well, so basically, the most appealing aspect of Bitcoin, it's in the name, it's in the title of the white paper, peer-to-peer currency. And you can custody Bitcoin with no trusted third party. You can send it with no trusted third party. An exchange, FTX, Coinbase, Binance, that's not Bitcoin. You can go there and you can give them dollars, and they can, add on their personal centralized ledger, hey, we owe what's his face 10 Bitcoin because he paid for that. But unless you hit withdraw, put in your public address and send it there, you're not using the Bitcoin network, right? The Bitcoin network exists outside of these exchanges, and private keys are simply the means of, controlling the wallet. The private key is the Bitcoin, and it's just information, so you can memorize your 24-word phrase in your head. You take your Bitcoin with you anywhere. It's awesome.
Yeah. I mean, I think to me, it comes down to Bitcoin being like the least uncertain asset. It might be risky as far as the exchange rate in the short term, but the asset itself is very consistent. It's perfectly scarce. It's immutably perfectly scarce. It's verifiably scarce. It's portable. It's durable. It's divisible. It's fungible. It has all of these monetary properties that are pretty much not comparable to any sort of monetary tool humans have ever used in history.
There's never been anything perfectly scarce, and I think it's hard for a lot of people to really grasp that concept because it hasn't existed before. Time is scarce, but time's not exactly. You can't store time in your head. It's just a constant flowing thing. You can't control time, but you can control your Bitcoin, and it's just weird to think about, like absolute scarcity. I don't know how we can really explain it to people other than you just have to really look at the the supply schedule and the increasing demand. Just think about what's going to happen, right? Over time, more and more people discover Bitcoin, they learn about it, and they're like, oh, this is interesting, maybe I'll just buy a little. And you see the number of people who do that slowly increase over time, but there's not more supply to accommodate them. So it's a simple supply and demand equation, economics 101, what's going to happen.
Yeah, and I think it's interesting because kind of going back to FTX, what we started this conversation with, right now, the crypto world is kind of completely imploding, especially like the centralized exchange, the yield product nonsense.
And there's no scarcity on an exchange, right? They can sell one Bitcoin to a billion different people like FTX did. So until you withdraw it, the exchanges are not scarce. Bitcoin is scarce.
Yeah, 100%. Yeah, exactly. And right now we see this entire crypto industry just completely falling apart, and people think, Bitcoin is dead again. But in reality, if you just flash back a few years at the 2018, 2019 bear market, Bitcoin was trading, like we said, at $3,000. That's over 5x return from where we were just 4 years ago.
And things only die once, right? There's been, 500 mainstream articles with the headline, Bitcoin is dead? How does something die 500 times?
Yeah, it's crazy. And I think it's interesting because like the funnel for Bitcoin is kind of like, at this point, everyone in the world knows about Bitcoin. Mm-hmm. It's just kind of a matter of them understanding it and having like confidence in it as like a a long-term store of value. And, I think more, as you said, more and more people, like Glassnode is a great resource that shows the, number of entities on the Bitcoin blockchain.
Mm-hmm.
And you can clearly see that even during bear markets, that's steadily increasing, pretty consistently.
Yeah, and when people hear about something enough times, eventually they're going to go around and be like, all right, what is this actually? And we know Bitcoin's not going away. And, there's been billions of dollars invested into mining infrastructure. Obviously, it's here to stay. That's a very low time preference for you to build out these massive facilities that take years. Bitcoin's not dead. People are going to keep hearing about it more and more. And it's just a positive feedback loop. When people hear about Bitcoin, some percentage of them dig into it, figure out what it is, realize it's absolutely scarce, and they need to get some. And, that over time causes the price to go up. More people hear about it. The price goes down. More people hear about it again. And every time people hear about it, somebody's gonna start buying some more.
Yeah, exactly. And Bitcoin is extremely volatile, right? We all know this. It goes through these massive bull runs and then these massive deadly bear markets. And to me, I've always said that Bitcoin's volatility is a feature, it's not a bug.
100%.
The bull runs bring in massive adoption because Bitcoin just goes up 10x in a very short period of time, and the news gravitates toward that, social media gravitates toward that, people gravitate toward that. Some people get in, and then some people get washed out in the bear market because they don't fully understand what they own. But again, that's kind of a feature. The only people remaining at the bottom of the bear market are the true hardcore people that really understand Bitcoin, or at least have the conviction to hodl through extremely tough times.
And the time aspect of it is so weird because it's only been a year since Bitcoin was at its all-time high, right? But a year is nothing, but it feels like it was forever ago, doesn't it?
Yeah. I mean, that's the one thing that I think is very interesting about Bitcoin is that Will and I have talked about this before, how you'll remember certain periods of your life when the price of Bitcoin was in a certain area.
Yeah.
I very clearly remember the March 2020 bottom, and I've some of these capitulations that we've seen on the way down this year. I've had flashbacks to those days looking at the chart. And I'm like, oh wow, that's pretty crazy.
And that was not even 3 years ago, and it probably feels like ages. And Bitcoin's just it's so young still. It was first blocked 2009, so it's coming up on 14 years. It's barely in its adolescence, so we still got a long way to go.
Yeah. It's truly crazy, and it's interesting because a lot of people, Safety writes books about it. We've seen the Nakamoto Institute, which was an original key resource by Pierre Rochard and Bitstein, and there's so many other great books about Bitcoin. But I think at the end of the day, no one really truly understands what Bitcoin is. I mean, we have a general grasp of what we've created, but at the end of the day, this is kind of this alien technology that happens to be a very interesting monetary tool that for people that hold it and get in and they use it as their savings technology, they end up accumulating an extreme amount of wealth, and that's going to continue to change the world. It already has changed the world, and we're likely just at about to probably reach a tipping point as far as the S curve of adoption of Bitcoin on a global scale.
For sure. And I think something that's important to think about is as Bitcoin gets older, there's all these an increasing number of resources out there to learn about it, and furthermore distinguish between Bitcoin and all the other crypto digital assets. And obviously this FTX situation, as I think it's been a net positive in that regard, because you see Jack Mallers was on CNBC, I think, just absolutely ripping in anything that wasn't Bitcoin. Brilliant 5-minute explanation of what makes it different. So all this content is just really helping, I think.
Yeah. I think one thing that a lot of people don't either understand or may not think about is I think economic systems inevitably converge towards one money. Yes, there's regulation, so certain countries or certain jurisdictions, use the US dollar, use the euro, use the yen, whatever.
Up until 1913 when we went to fiat, and a little bit before then when they started doing true paperback gold, or gold-backed paper, I should say. It was really just gold. Everywhere in the world used gold for a long time.
Yeah, because people
money.
Yeah, exactly. Because the point of money is to solve, this coincidence of wants. You don't want to go to your neighbor and trade your cow for eggs. You want to have this one most marketable good that you know that if you get it, you can easily trade that with someone else for whatever they have. And then we all converge on this one good, and then prices start getting set in that one good, and that good just happens to be what we think of as money. And then certain goods are better monies than other goods. And the reason that Bitcoin, in my opinion, is the best money is because of its unique monetary properties, which is perfect scarcity, immutable perfect scarcity that's verifiable, divisible, portable, durable, etc. And I think that no tool has those unique properties. And I think that's like a very, first principles based approach of evaluating different tools to be used as money.
Yeah.
A lot of people say like, oh, Bitcoin's, it's not a unit of account. It's not a medium of exchange. Today, you could argue it's not even a store of value in the short term, obviously. But I think they're looking at like the end game of what money is rather than, okay, like how does something even become that in the first place?
If you wait for Bitcoin to be a universally used medium of exchange, you're going to miss all the gains.
Yeah, exactly.
It's that simple. And Bitcoin just takes what was good of gold, store value over time, and what was good of fiat, store value across space and scales, and it combines them into one.
Exactly. Yeah, it's going to be very interesting to see how it plays out. I know Blockmore Intelligence recently published a report about Bitcoin's purchasing power, and you led that report. You want to give us a quick summary of it?
Yeah, for sure. So the premise is, because fiat's so terrible at being the store of value, humans are forced to save their wealth in other assets. Maybe they're not consciously thinking, oh, I'm buying this house just to save money because fiat's so bad. And you naturally buy these other assets, right? A lot of people's retirement, their plan is to invest in a 401k with a match, and they put it in the S&P. That's their savings is the S&P, right? But money should be savings, right? You should be able to save, in what you earn, not have to put it in any asset with counterparty risk. Everything has counterparty risk, right? The S&P is quote unquote safest place to put your money. Treasury bonds also, that's supposedly safe, but with bonds you're getting, negative real returns from inflation. S&P obviously can crash huge. Like if someone was planning on retiring this year, market tanks, you're straight out of luck. So all of these assets have what's called a monetary premium, right? Their value is bid up beyond their true utility. The utility of a house, it provides shelter from the elements. But that value is way less than the nominal value because people have to use it as a store of wealth. So under a Bitcoin standard, everybody will be able to save in Bitcoin. So it's gonna take away that monetary premium of other asset classes. And based on our rough calculations, were Bitcoin to do that, it would have the purchasing power for about $22 million.
Yeah. I mean, it's interesting, and it's going to be very fascinating to watch how it plays out over the next 10 years, 20 years, etc. But I truly agree that people really, in your 401k, for example, you literally put your money in probably millions of different assets. If you break down the actual index funds that you're probably in multiple 10 plus index funds, and those index funds might hold other index funds, which might hold equities in China, Japan, and Europe, and the US, and those companies might own other companies, and at the end of the day you're just kind of scattered everywhere because you don't know how to save for the future. So you're just like, all right, I don't want to keep all of my eggs in one basket. I just want to kind of buy everything and hope that at least some of this stuff is going to go up.
Yeah, and the people we're not talking about here, right, is the people that don't have access to these financial resources. Outside of major like powerful nations like the United States, you go to those other places like El Salvador. They don't have access to the stock market. They can't buy U.S. real estate. Maybe they can buy gold, but that doesn't really, you can't transact with gold. You're going to bring a shovel and a scale to the marketplace. And so it's, Bitcoin is globally accessible to anybody with an internet connection. More people have access to a phone and the internet than they do bank accounts. So that's really, when we're in America, maybe you can do the 401k thing. And like Michael Saylor says, you can, row exponentially harder against, an increase in current. I think that's one of the metaphors he uses to describe inflation. You might be able to do that in America and just get by, but the people that don't have access to financial instruments, they can't fight against inflation.
Yeah, Yeah, and I would even possibly take that a step further because not only can they not invest in like high quality assets that we might be able to in our 401k, but they don't even have access to be able to borrow cheap money. Think about it, if you're a billionaire in the U.S. as of 2020 and 2021, you could borrow money at close to 0% interest. Could have bought the S&P 500. Now you're up, I don't know, 20-25%. From somewhere in 2020, and that was pretty much free money for you. People in Africa that may not be able to even get access to the S&P 500, let alone acquire capital at a near 0% interest rate. So I think the fiat world kind of skews towards like the wealthy having an extreme advantage.
For sure.
And I think that Bitcoin might change that.
And the problem is it gets blamed a lot on capitalism, but we don't live in a free market unless the money's free. I'm not the first one to say that, but just think about it, right? When the cost to borrow money is manipulated by the central bank, that's socialism. It's literally a central bank. They're centrally planning money, which is the key ingredient to keep the economy going. So we have far from a free market until the money is truly free.
Yeah, it's so interesting because like taking an economics class in college, they'll explain the basics of like, okay, like this is why we don't centrally plan the market for, I don't know, water bottles or microphones, right? Because like you can't centrally plan it. You need the individuals and the market participants all acting in their own self-interest, and it naturally finds an equilibrium of supply and demand. But for some reason, money is the one product that we need to centrally plan, and that's how it's gonna, best benefit everybody. I mean, maybe it's possible, but to me it seems highly unlikely.
Oh, yeah, no doubt. Do you think Satoshi ever thought Bitcoin would get this big, or do you think he, she, or they, whomever Satoshi may be, just sort of put it out there as like a little fun project?
That's such a good question. I mean, obviously it really depends on who Satoshi actually was or who they were. I don't know. I think that is it. I don't know. What do you think?
I don't really have an idea. That it's hard to dig into the mind. All we know is Satoshi was brilliant. I tend to lean towards that it was more than one person. I don't see how one person could be so smart and foresightful with all the incentives that are created, and from that halving schedule to the difficulty adjustment to just the energy level, and obviously they were definitely libertarian minded. It's interesting to think about it. They probably didn't foresee it getting as big as it has in as short of a time, right?
Yeah.
They didn't expect. So El Salvador adopted it in 2021. In 12 years, they had a nation state adopt their little magic internet money as a currency. So they probably didn't expect it to go that fast.
Yeah, I mean, I think one of on like Bitcoin Talk or something, someone asked him, they're like, so how is Bitcoin going to work post 21 million Bitcoin being mined? And I think he was like, hey, at that point, there's either going to be a lot of people transacting Bitcoin or there's going to be nobody transacting Bitcoin. Yeah. And I think that's a very fair assessment. And I think it was kind of a binary outcome, and so far it looks like it's going to go in the outcome of a lot of people transacting Bitcoin.
That's a good point. And you did a little report on that as well with the transaction fees. You want to dig into that? Because I know that's a common FUD, right? You need perpetual inflation as the block subsidy gets lower. There's going to be no incentive to mine, and Bitcoin's going to be vulnerable to an attack. So what's your counter argument to that?
Yeah, so it's such a fun, interesting debate within the Bitcoin and crypto community, because I feel like a lot of people poke fun at Bitcoin or think that this is theoretically one of Bitcoin's major flaws, and I fundamentally disagree. I think that
before you go on, I just want to say it's a theoretical flaw, right? And all of Bitcoin only has theoretical problems, whereas we're saying in crypto it's all reality, real problems that are actually happening now. Anyways, keep going.
Yeah, definitely. So a lot of people think that it's the block subsidy that kind of secures Bitcoin, and I kind of think that's just kind of the wrong way to look at it from the get-go. I think private keys and running your own full node, that's kind of what secures Bitcoin. That's what gives you access over your Bitcoin. And right now, people or miners could theoretically censor transactions. They could even reorg transactions so they could come back and say, hey, I sent 5 Bitcoin to you. A miner could be like, actually, no, you didn't, and start building on the block right before I sent the 5 Bitcoin to you. And then basically, you could see 6 confirmations on your node, and then later you'd be like, oh shoot, I have 0 confirmations. Joe just basically double spent on me. And so that,
Come on, Joe. Do that to me.
that would be one example of a 51% attack. I definitely encourage people to read the actual full report because there's a lot that goes into it. But the general idea is transaction fees are actually what secures Bitcoin, not the block subsidy, which is newly mined Bitcoin. So the idea is if Bitcoin's where it is today, no one's really attacking it. No one really cares. It's too small. If Bitcoin becomes very powerful and becomes $100 trillion plus asset, it's become the global treasury reserve asset or the global monetary base, it's going to be very valuable, right? And so transaction fees are actually what's going to secure Bitcoin. And 51% attacks are somewhat theoretical anyways. We hardly even see 51% attacks on other proof of work blockchains, and if they do, they don't last forever. Eventually they disappear, and users can resume transacting normally, because it's something that you can only burn resources for so long and not have any consequences for just burning resources. Yeah. So it's kind of a non-economic attack to even 51% attack the network.
And if you have 51% of the hash, you could mine 51% of the blocks. And right now you'd be making $10 million a day. So that just doesn't make any sense.
Yeah, exactly. And that's a great argument. Once you accumulate a significant amount of the hash rate, you might as well just be mining Bitcoin at that point.
Yeah. Plus, the biggest mining facilities aren't even scratching the surface of total network hash rate. So it's just it's impossible to get a facility that big or even confiscate a bunch of facilities even close to 51%.
Yeah, exactly. And the general idea is, even if a miner does control a large portion of the hash rate, if you're a user and for some reason that miner is censoring your transactions, all you have to do is raise your transaction fee, and that encourages more miners to join the network and start mining your transaction. And that's basically the market-based response to censorship. And this it's not really theoretical either. We saw this back in 2017 when the block there was not enough space in blocks. There was high demand to transact. People started raising their fees. The block reward in total, or the block transaction fees per block, went to 10 plus Bitcoin for a little bit per block. And if Bitcoin's a $100 trillion asset, and say someone's 51% attacking the network, and no one can transact on the chain, they're just mining empty blocks, there's going to be a lot of people raising their transaction fees, and it's going to be a gold mine to be mining Bitcoin.
I know there's someone out there who's thinking, well, the transaction fees are so high, nobody's going to use Bitcoin. The only reason the transaction fees are high is because everyone wants to use Bitcoin.
Yeah, exactly. Yeah, and I definitely think in the future we're going to continue to see more second layer solutions like Lightning, Fedi Mint, side chains like Liquid, Rootstock, and it's going to be interesting to see how that plays out. Something I'm excited about.
For sure. You know what else I'm excited about? It is Blockware Intelligence. I think we've got some good stuff going on here. We've got the end of year report coming up, so I'm excited. I think this first in-person pod's gone pretty well, so I think we're bullish on Blockware for sure.
Exactly, yeah. So we're filming this, I guess, November 17th. I'm sure we'll post it probably this week or next week. But yeah, we're coming out with a 2023 forecast all about macro, Bitcoin, mining. Guys, audience is definitely gonna have to check that out.
For sure, yeah. If only Blake was here, then we'd have the whole intelligence game.
We do need Blake. But yeah, no, I thought this was good. I thought it was a cool, fun, in-person podcast.
Yeah, for sure. I'm glad we did this.
Yeah, I'm glad it's our new studio too, so that's great.
Shout out to the Moose. We couldn't get a bear in time, so unfortunately, we're not killing the bears just yet. But thank you everybody for watching and listening. Make sure to like and subscribe.
Absolutely. Thanks, guys.